All right, let's just jump right into it. On February 21st, 2026, something huge just happened. The U.S. Supreme Court dropped a decision that sent massive shockwaves through the global markets. I mean, with one single ruling, they basically tore down a huge piece of the president's trade policy. And just like that, we've got a major constitutional and economic showdown on our hands.
And the political fallout? Oh, it was immediate. President Trump did not hold back, calling the ruling, and I quote, a disgrace. That's a pretty clear signal, right? The fight in the courtroom might be done, but a whole new political battle is just getting started.
Okay, so what did the court actually do? You gotta understand, this wasn't some tiny little policy argument. No, no. This was a fundamental showdown over presidential power itself. We're talking about the Supreme Court stepping in and literally redrawing the map of who gets to control American trade. And to really grasp just how big a deal this is, you have to know what was on the table. The president had used this claim of emergency powers to slap a huge 10% tariff on goods from, well, most countries. And for our closest neighbors, Canada and Mexico, it was even higher, a massive 25%. And that whole emergency claim, that was the entire legal leg it stood on, a leg the court just completely kicked out from under it. The court's decision by a 6-3 vote was pretty darn clear. It all boiled down to a core principle that goes way, way back to the founding of the country. Congress, and only Congress, has the power to tax. And since tariffs are, basically a tax, the president can't just snap his fingers and create them. So this ruling didn't just adjust the policy, it blew it up. The global tariff is gone. The levies on Canada and Mexico are gone. This is a massive, massive check on presidential power. So you can imagine the reaction outside the U.S. was instant. And, well, it was all over the place. This decision landed like a rock in a pond in a world already super nervous about trade. And right away, it split everyone into two completely different camps. And you can really see that split right here. On one side, you have trading partners like Brazil and Germany who were basically breathing a sigh of relief, hoping for some stability and predictability to come back. But on the other side, President Trump immediately pivots, announcing he's going for a new 10% tariff. But this time, he's taking it to Congress. So the fight is far from over. It's just changed locations. Okay, so that's the politics, that's the global reaction. But what about the money? Where did the rubber meet the road? To see the real, immediate impact, we've got to follow the numbers and figure out how the markets actually digested all this. So, how did the markets react? Well, at first glance, it looked like a total relief rally. The S&P 500, the Dow, both jumped up. It seems like they were celebrating the end of those tariffs. But then, the picture starts to get a little fuzzy when you zoom out. You look at Japan's Nikkei, for example, and it went the complete opposite way. So, what's really going on here? The really big winner of the day was tech. The Nasdaq surged almost a full percent. And it wasn't just because of the tariff news. It got a huge boost from a massive AI chip deal between NVIDIA and Meta. It's just a classic reminder that sometimes one hot industry can have enough momentum to pull the whole market along with it. And then you've got this outlier. Japan's Nikkei dropped more like 1%. Now, this had nothing to do with the U.S. Supreme Court. It was all about local investors cashing in and taking profits after their own inflation numbers came in low. It's a perfect example of how global markets are not a monolith. They don't always march to the same beat. So the headlines are all screaming relief rally. But if you just scratch the surface, if you look at what's going on underneath, oh man, the economic picture gets way more complicated. In fact, there are some seriously conflicting signals pulling the market in different directions. And here's the core issue, right? While the market was popping champagne over the tariff news, the actual U.S. economy is looking pretty wobbly. GDP growth is weak, and inflation is being really stubborn. It's sticky at 2.9%, which basically means it's not coming down nearly as fast as anyone wants. All that pressure means the Fed is probably going to keep interest rates high for longer, and that is like pouring cold water on a market rally. And even inside the tech sector, which looks so strong on the surface, there are some hidden dangers. There's this really fascinating trend starting to emerge where some big money hedge funds are quietly starting to sell their software as a service stocks, SaaS companies. The bet is that the AI revolution could totally flip that business model on its head. It's got some people whispering about a, wait for it, SaaS apocalypse. And then there's energy prices, which you just can't ignore. Brent crude oil is now knocking on the door of a 6-month high. And look, this isn't just random noise. This is being driven by geopolitics. There's a massive 15-day deadline for the Iran nuclear deal coming up fast. And higher energy costs? They act like a hidden tax on the whole economy, just slowing everything down. So you've got this incredibly messy picture, right? Good news from the court, but some pretty concerning news about the economy. It means all eyes are now laser focused on the week ahead. And it is shaping up to be an absolute gauntlet of corporate earnings that's going to tell us which one of these stories, the good one or the bad one, is the real story.
I mean, just look at this lineup. We're about to get a health check on the average consumer from Home Depot, a read on global trade from Alibaba, a look into big business spending from Salesforce and Dell. But the one report that everyone is holding their breath for, that's on February 25th, NVIDIA. Honestly, their results are being treated as a make-or-break referendum on the entire AI boom. So that's where we are. We've got a relief rally that's built on some really shaky economic foundations. The market is literally trapped between good news on trade and bad news on the economy. And that brings us to the ultimate question. Are the upcoming earnings from these huge companies going to rescue the rally, or are they going to be the final confirmation of the recession that so many people are afraid is just around the corner? We're about to find out.